morning, everybody. Welcome to the panel on investing in defense tech. My name is Ali. I'm a defense tech analyst at PitchBook. Just from the data side, I can say that it's been really remarkable watching the sector take off. Last year was a record year of investment. So I'll have our panelists introduce themselves, just say your name, a little bit about what you do, and what lens you look at when looking at defense tech.
So I'm Lily Kim. I'm with the University of Utah. We are a $2.1 billion endowment. When we look at defense tech, we look at the same as any other investment. We look at opportunity and the fit and the alignment. And in defense particular, I think is very interesting because Utah as a red state, it's aligned as Utah is a leader in terms of defense, in terms of minerals, in terms of innovation, and so it's a great area to look at.
I'm Erik Kreissman, a partner at Altimeter Capital. With regards to our investing, we always focus on the entrepreneur and the quality of the team and the size of the prize and concentrate capital into the couple of teams we believe can benefit from powerful outcomes.
Hi, I'm Terry Monis. If you couldn't figure out by the way I'm dressed, I'm the allocator. These are the tech guys. I'm with ICG Advisors. I'm the Co-CIO. We are an $8 billion outsourced CIO and multifamily office based in Los Angeles. And we have a defense tech portfolio, not because we tried to, it's because we invested 15 years ago in VCs that were doing difficult things, and they tend to be hard tech, deep tech stuff. And investing in spaces that were not crowded and weren't flooded with capital. And today, we're very fortunate to have a great portfolio of defense tech companies with managers like 137.
And I'm Christian Garrett. I'm a partner at 137 Ventures. We're a 15 billion AUM technology investment firm out of San Francisco. We've invested a lot in this particular category, although we are generalists. So we're one of the longest and largest investors in companies like SpaceX, Palantir, Anduril, a lot of overlap with Erik as well in companies like Hadrian and others. I'm also the co-founder of two things that are adjacent as well. I co-founded the Hill and Valley Forum, which has become the largest kind of DC and tech gathering every single year. And then I also recently just co-founded a European defense and industrial roll-up called Onodrim, which we just announced our seed round last week. And most importantly, I'm very lucky to have great LPs that are much better dressed than I, like Terry and others. So.
Okay, cool. Thanks, everybody. So I guess the first question is what even is defense tech? Like, we always hear about dual use, we hear about defense native. So how are you guys looking at defense tech when you're kind of making decisions, investments, et cetera?
We actually have a broader sort of definition of it. We tried to frame it in terms of national security and think about what industries need to be bolstered and where we need to have great innovation to protect our nation, basically. And that's from like bleeding edge, cutting edge tech, it's energy infrastructure, it's manufacturing industrial base. And it's also the O-line defense companies. And that it's, people think about defense tech and they think about venture and they think about super long timeframes and very high returns, very high risk. But if you take just a national security broader perspective of it, it encompasses private equity, growth equity, and even some public companies. So it's really a broader mandate for us. It's not just looking at one narrow thing.
Christian, Erik?
Yeah, I think for us, it really has been something obviously we've been investing in for 15, 16 years now. I don't think the investment thesis has particularly changed even from 15, 16 years ago. We still want to invest, even as Erik said, right, in generational, durable businesses. We still have the same framework for when we look at a company like Gusto or Ramp, which are completely unrelated, to the same framework when we look at an Anduril or SpaceX. I think the interesting thing about the category now has been the particular tailwinds, right? Before, you had a very static defense budget that was more or less growing with inflation. Now you have that growing potentially 50% next year if the $1.5 trillion is real. In Europe, you have a doubling or more of defense spending there, and you're seeing that across other allied countries. And then particularly, you have a growing percentage of that spend that's rapidly shifting towards next generation technologies. So I think it's made the category have a lot more growth and a lot more opportunity than before. But fundamentally, we're still looking for the same core defensibility characteristics in these businesses that exist across all of our businesses. And I think that's everything from, and particularly why this category is so interesting is because it exhibits some of these things, which economies of scale, all the way down to these are extremely sticky and long and durable businesses as well. Your customer does not churn when you get a program of record, right? So fundamentally, I think it's still looking at the same way. You just have a huge structural shift that's more interesting.
Yeah, makes sense.
Yeah. For us, it's, we think about defense tech, obviously there's the customer aspect of you're selling directly to the Department of War, or you are selling to a customer that is selling to the Department of War in the United States or allied countries. Similar to what Christian is saying, the tailwinds that we've been excited about, first and foremost is you have, in the modern era, incredible entrepreneurs that have come out of companies like Palantir and SpaceX that were really pioneers that have now started other companies, whether that's Anduril, where we're investors, or Castilian, et cetera. And you just have these incredible entrepreneurs and these supply chains sort of that are getting built out on the industrial base. And so that's really how we kind of, I guess, define the category.
Yeah.
And then the policy and macro tailwinds, I mean, as a percentage of GDP, you're seeing spending increase across the board, whether that's in the US, whether that's in NATO. And then again, Christian and I, as you could tell, in a lot of the same companies have a similar point of view on this. The allocation of those dollars is shifting to more modern, AI-driven, autonomous, attritable systems.
Yeah, it's almost like it's kind of like an infrastructure for like national security, national resilience, because we were talking about this earlier, like energy counts as defense tech for some people, right? And even Boom Supersonic, they just refashioned their turbine for a generator or something like that. So there's definitely second order effects. So I'm also curious on, when you're either picking managers or you're picking entrepreneurs, how do you separate hype from actual winners? Like, are you looking at the business model? Are you looking at the product, the innovation, their ability to sell to the government? How are you exactly distinguishing that?
I think it's all of the above. And I think, they had a great response for what they define as the defense sector. But I think as an allocator, we have such a broad spectrum. And then there's some allocators where they have to stay away from anything that is part of that industrial war complex. Then there are some that are like, we can't do anything that's offense, but we are comfortable with defense. And I think the thing that we look at the most as an LP looking at GPs is that intellectual honesty and that having that debate of what is it, what are we funding, and is there going to be any surprises in the portfolio when we invest, and making sure that everything that we are looking at that they provide us, a glimpse at, it aligns with all the multiple stakeholders that we are working to serve. And in terms of with what you're saying about, is it the innovation, is it just, the scalability, I think it's all of that. And I think that's where you have to look at the individuals of the companies, like the founders, and where is their vision and where can they lead it. And I think you see that in the companies that they mentioned, like Palmer with Anduril, and then Palantir, and you see that with Hadrian and Chris. And it's almost interesting because I think if you ask anybody about the primes, who founded Boeing, who founded Raytheon, but Anduril, it is synonymous with Palmer, right? Hadrian is synonymous with Chris. And I think that is very compelling in today's world.
You mentioned hype, and we should address that because there's a ton of hype. And with hype, there comes money, and with a lot of money comes a super, super high valuation. So as an allocator, it's difficult to kind of wade through that. But there are underlying huge currents, other than just us realizing that China's a near peer adversary, and we're going to be increasingly confrontational. So there's an undercurrent that's supporting this, but just even a bigger picture support of this hype, and kind of pushes it along, is that the world is becoming more protectionist, more populist, and more nationalist. And that's leading to fragmentation, that's leading to onshoring of our capabilities in terms of defense, in terms of energy, in terms of our infrastructure. And so that's going to create very big sector winners and sector losers. And defense tech is primed to benefit from that nationalism, that populism, So it's almost like you sort of have to hold your nose a little bit and invest into the hype. But you have to really, really do your work. And there are few managers out there that have the connectivity to the groups of founders and the spin-offs from those great companies that they found to get into the best companies at the right time, but also really, really understand how difficult it is to sell into the Department of Defense or Department of War, whatever they call it these days. So investors have to be really, really careful that the VCs have the young people, the energetic people who are trying to solve the world's hardest problems, but also have those grizzly old people that have been in the Department of Defense, worked for, were a congressional staffer, understand the appropriations process, understand what contracting looks like with the government. And we see new defense tech VCs start up every day, or we see generalists move into the space every day, and it's absurd how little they know about how hard it is to actually build a very good defense tech company and to build a portfolio of good defense tech companies.
Yeah, I think Terry brings up two good points. I'll give the what's exciting about this category and then the things you have to be completely aware of when investing in it. What's exciting is exactly as Terry said, this huge increase in spending and the structural shift in what percentage of that spending is on these next generation technologies, like we said. But in particular, the biggest piece is that the market size is not hype, right? Just the US alone is $1 trillion TAM, right? Now, a large percentage of that is on sustainment, a large percentage of that is on just payroll and salaries, but of that, you have hundreds of billions of dollars that is completely addressable. And it is one of the stickiest relationships or contracts you can get if you get a program of record. That spend is increasing, and to Terry's point, the volatility in the world and the sort of renewed understanding that we're not at the end of history is very much continuing to reinforce that this is a long-term trend. So the trend is very real. It's not like other categories where it's unclear what the TAM is or it's unclear what steady state is. It's very understandable exactly the opportunity set. The reality when investing in it is that, one, any highly regulated industry always tends towards a power law concentration of players and winners. I am supposed to use the term oligopoly, but our comms lead says not to use the term oligopoly, so I won't use it. But that is always how these things always trend. And so you see that in defense sector as well. The majority of spend will concentrate towards a small handful of players. There will only be a couple of primes. There will never be 20, 30, 50, 100. And then you will have a sort of subset of lowercase p primes and a long tail of contractors. So most of the companies that you're investing in, or most of the companies that you'll see your managers investing in, will end up small contractors. They will not end up large platforms. The second piece is this is a historically low multiple industry. I think multiples are going up, particularly mainly because of growth. But also I do think there is more value that's accruing here, and as the world is seeing more disruption, you probably want to be in these stickier or previously lower multiple revenue categories of selling to the government because of the sticky long-term relationship or nature. But gravity will hit, right? These are not software companies. Third is you need to be a platform. You will hit some zenith of opportunity if you are just selling a singular product. That is not a venture return. You need to have a story being a platform, and most of these companies are not platforms. Across the US and Europe in particular, where you're seeing a ton of new entrants come in, building great products, it's incredible, and I'm excited for it, but we have to be real that not many of these things are venture outcomes, which is fine. And then the last piece is exactly that, which is building the best product is not how you win in the defense industry, right? You have to be able to sell it. And that is the insight that the successful companies like Anduril really had from the Palantir days in learning that the hard way. But I think that's the other key piece is, you're not just backing a novel technology in this sector. That's not how you win. You have to back someone with the ability to go effectively sell to the defense sector and effectively create opportunities, right? Many of Anduril's wins were push and pull, right? They were pull from the government, in the government saying, hey, we would like someone to solve this and we will give a contract for it. And many of them were push, which is them going to work on crafting a program of record or getting language adjusted in the NDAA that is supportive towards their product so that they can win during a procurement process.
It's crazy. You have to sell the warfighter who's on the ground using the product. You have to convince them that it works. You have to convince their boss, the decision maker at the DOW. Then you have to go to Congress to get appropriation, but you're probably talking to a staffer of someone that's on a committee, and then you have the whole Senate. That's the whole process. You have to hit all of those points, and you have to have those relationships at all of those points to be successful as defense tech, and it's tough. It's tough.
And I think I'll add to that, you ask about the hype, and I think with hype, you see people as a trend, rushing in and crowding into trades or ideas or themes. And I think what is almost a misnomer about defense tech, it may seem like a hype now, but you had to have been in this 10, 15, 20 years ago. You have to have the relationships in existence. You can't do it alone. I don't know if it's an oligopoly oligarchy, but I do know it's like almost a consortium. It's partnerships, and it's a small space. And like he said, it's not going to be like 20, 30. It's a small handful of players. And one thing about venture in the defense tech, as I've talked to different managers, you never hear them saying anything negative about one another. If you mention another individual, they are the first to praise them or to speak highly of them. And you see that also in these companies like a Supersonic or an Epirus. You see all the tech firms coming together to support these founders. I haven't really seen that in like consumer or other sectors like the defense, where they find a founder and then they all rally behind them. And I think that's special, but that doesn't come overnight. And it also takes special individuals to get that kind of conviction from others.
Right.
Yeah, I think for us, right, like we particularly believe that few companies will ever matter in any sector. I think that's even more true in defense. Talent's going to concentrate against a couple of opportunities that are actually worthwhile to go after. So we're really focusing on who are the teams that have identified, requirements that are a priority for the customer, actually understand them, have the ability to deliver on them, can convince the customer that they are the ones to do it, and then the size of the prize is large enough, or they're supplying the entire sort of like defense industrial base with an irreplaceable input, like a company like Vulcan Elements that is, onshoring rare earth magnets that every satellite, every drone, every submarine, every fighter jet, everybody needs. And so either you're kind of vertically integrating, as a result, you've got a more interesting cost structure, so you can hopefully trade at a better premium to the legacy primes, or you are supplying these next generation primes becoming a neoprime. And then again, like the beauty of this industry is if you are aligned towards a requirement, you understand how to sell, how the customer wants to buy. You can either shape the requirements or meet the requirements. Some of these programs outlive people, right? And so this is really durable revenue that you can scale into. And a lot of these companies do partner, right? You'll see whether it's a Supersonic or a Castilian or an Anduril and a K2 or a Hadrian, like they all do work together to ultimately deliver these like full solutions and capabilities to the Department of War. And so there is a lot of collaboration, but I'd say there are a few slots to really emerge as a next generation prime.
Yeah, the collaboration is interesting too, because I feel like the consortiums that are created have also been very successful at lobbying the government to kind of change its buying practices, right? I mean, compared to like last year or 18 months ago, it is easier for the government to buy. I mean, it is easier to sell as well. Is that correct?
That was a long slog and a long fight. I mean, Secretary Carter under Obama, kind of jump-started the DIU in the Department of Defense and had the head of the DIU report directly to him, noticing that this is so important, we have to innovate. But we're 3 administrations later, and now we're starting to get that traction, and now it's a real thing, and now it's a budget line item, and now that's where you go. It's a program that's working, and there are multiple ones like that across the Department of Defense. But yeah, it's been a very long slog. This started a long time ago.
Yeah, I think that's the thing people miss is Terry brings up a great point, right? This trend has been happening for a while. It's obviously accelerated, particularly in regards to like the shift in how the Pentagon is spending money and how they're running their procurement processes. You saw initiatives even during the Biden administration, like the Replicator initiative, which was an awesome initiative that Kathleen Hicks ran, and that was also the beginnings of sort of continual change. Anduril's greatest years were really during the Biden admin, right? Was the first time they showed a program record in a second type of category with a different department under a different administration after the Trump administration when they got their first one. And so, I think I always tell people to remember that this trend has been happening and it will continue. It definitely has accelerated the last 18 months with the current administration. In particular, a renewed focus not just on giving more opportunity, more access to startups, and increasing spend to working with these innovators, but the third is also trying to reform procurement. And you've seen some of the executive orders, you've seen some of the shifts in adopting some of the forward principles in the NDAA. Have been really encouraging. I will say I don't think all of our problems or everything will be fixed. I think even the Pentagon is running into the same walls in trying to change how procurement's done. I think as long as you steer the ship and you make hundreds of basis points of change every single year, then like over time, that's how you get impact. In government, you're never going to get in 2 to 4 years of an admin's kind of momentum, a full shift in everything, unfortunately. But it's been very encouraging what's happened so far. And for me, actually, it's a reminder, like this is why economic growth and maintaining the strongest technology sector is so important because that's what funds the ability to spend on defense. Western societies will never be the most efficient spenders. So therefore, you need to make sure that you spend a lot. Yeah. And I think that's also the other key thing to remember here is that, in some sense, this is all downstream of making sure we have GDP growth. And the only category that's growing right now is the technology sector. Yeah. And so, in essence, if you support those things, you also make sure that we have a shot to figure it out on the defense side.
Yeah.
And I think one thing that's adding to that is government, people say, is inefficient, and he's right. And spending especially, I don't think it matters what party it is. It's always inefficient spending. But I think what's interesting about this new wave of companies that are coming is that they're able to be nimble and pivot. So there are problems, and the Pentagon recognizes problems, and they tell the primes, we need this, we need that. And you finally have the talent and the ability where they're like, you know what, that's a problem. Let me come up with a solution for you, right? Yeah. And I think before it was just like, we have a problem and there is no solution, so we're just gonna keep spending money on inefficient tools, right? But now you see all of the startups being like, you know what, we will create that. It doesn't exist, so we will create that. And I think what you're seeing with the government is, if they create it, we will fund it.
I think the shift has gone from cost plus contracting, where the government pays for the innovation, to private capital. People in this room are actually paying for the innovation. That's been the big shift, the big mindset.
Yeah. Yeah, it's definitely been fascinating to see, but there's always going to be some level of bureaucratic risk, right? I mean, you reduce that, but it's not going to go away. So I guess the main question that probably everyone in this room also has is how do we make money from this? How are LPs getting their returns? How are investors getting their returns? Christian mentioned economic growth. We want to create wealth so we can put more money into this. So how do you see the exit scenarios for these companies play out, Erik? Do you think it's going to be IPOs, M&A, or something else?
I think you'll see a combination of both, right? Yeah. Palantir's obviously been an incredible investment even after the IPO in the public markets. So there's a recent example that many people have had the opportunity to get access to and benefit from the growth in the public markets. Companies like SpaceX rumored to be going public soon. So I think that'll be another blockbuster exit. And then there's a healthy pipeline of a couple of companies that I think are in the position to where they could go public if they choose in the next couple of years, like an Anduril, and a handful of others that will have the opportunity to be standalone, enduring public companies and platforms in the defense sector. And then there will be consolidation.
Yeah, look, going back to finding people who are doing hard things, and finding people who are investing in spaces where there's capital scarcity. In defense tech, that's hard to find, but it does exist, right? We had an opportunity to invest in a company that's through a GP that's creating high precision component parts for the F-35. That's not part of the primes, and they need a big industrial footprint to do that. That's a way to get into the space to benefit from the secular tailwinds, more of a private equity approach, getting in at reasonable valuations. But valuations are so low that you can actually get sort of like venture type returns, because the valuation is so low, no one's looking at these boring businesses, right? And of course, Hadrian's trying to disrupt that whole business. But so I think taking a diversified approach, not just investing in the highest hype things, and taking, like I said, a little bit of private equity, growth equity, venture, some company formation, and diversify yourself across stage is probably the best way to do it. In terms of exits, I think there's a little bit of a correlation to, or a similarity to big pharma and biotech. Big pharma, they don't innovate, right? They buy the innovation and they distribute, and they can do that at scale. It's like the new defense tech companies that are doing the innovation. They can exit to the bigger primes, who can then help them scale up and manufacture whatever technology that is at pace and at size. So I think that's going to be an avenue and exit that's sort of like pharma and biotech.
And I think it's some of this stuff too is, everyone says, what can you do or whatnot. And I think a lot of things are actually out of your hands, things you can't control. And I think right now it's at a tailwinds that it's just benefiting the people that have been doing what they've been doing for a long time based on their conviction and principle, right? I think now everyone thinks Palmer's a genius, but once upon a time, they're like, who is this guy, right? But you also see the M&A activity. It used to, there was nothing happening. And now even beyond defense, there is M&A activity picking up. And so it's a very interesting time, and it shows you it's not about being at the time, like, where do you go from here? It's like, where were you to be ready for when this moment comes, right? Like, everyone thinks everyone's an overnight one-hit wonder, right? But it took a lot of discipline. It took a lot of no's. It took a lot of mistakes and a lot of learning. And so one of my best partners, when I was looking at some of their companies and I was asking, what about the exits? Because, one thing that allocators are very concerned about is the lack of distributions, right? And it was interesting, they connected me directly to a founder, and they actually walked me through all the different scenarios. And I appreciated that. And I think that's the thing about this sector, like I said, it's very unique. They want to succeed because it's not about just the fund. It's not just about one investment. It really is about global defense. And you really are aligned, and you really want to help America, right?
Yeah, I think you're going to see liquidity through, obviously SpaceX is a good example. That's going to return hundreds of billions of dollars back into the ecosystem. I think obviously, yeah, exactly, yes. And I think you'll see companies go public. I think you will see consolidation. It's definitely going to be needed. As we talked about, many of these companies are building point solutions. They're not building large platforms. Yeah. There's a little bit of a price mismatch, so I think that's the thing that founders need to be wary of, is you don't want to price yourselves out of an acquisition, which a lot of people tend to do in venture. And so that creates sort of some dislocations within this, but overall, I think it's not dissimilar from any other category. And then yes, I do think the legacy incumbents will also be more acquisitive. They have been always historically. And then I think you'll see other business models step in. You're seeing private equity continue to jump in more. Obviously, we're doing our own version of a holdco roll-up in Europe of these kind of industrial suppliers and these smaller defense companies. So I think you will continually see a bit more consolidation. One of this is tied to growth. The second is you need scale in order to go after it. And then third is this has been a industry that has atrophied in many ways, given it's still a relic of a Cold War sort of era of planning. And so not only is there a shift in spend, a shift in sort of the opportunity sets for the new companies, but there's also going to have to be a shift in sort of the defense industrial base overall, right? And I think that's the other interesting opportunity. And then I would say for the most part, the bigger realization is just that, and Erik hinted at this, companies are staying private longer. They're not staying private forever. So all that growth, and particularly from the defense tech perspective, is still going to be predominantly captured within the private markets. This is why you have Rocket Lab at almost $40 billion market cap, because there legitimately is not real much exposure to any launch provider that's actually launching, right? SpaceX will be the only real exposure for people outside of Rocket Lab at their listing. And so I think you see that in defense as well. The public markets right now are chasing obscure, smaller suppliers and defense contractors because that's really the only place where you can get more exposure outside of the primes. We've even seen suppliers to Anduril continue to trade at like crazy multiples, these kind of small cap businesses we never heard of, just so they can get exposure to Anduril growth. So I think that's going to be the other interesting piece, is basically you're going to see the exact same trend where people are starved for growth in the public markets and exposure to here, and all that's continuing to shift to the private markets. And I think that continues because, as we see, it's much more attractive for companies to go public when they are a large cap business, when they're in the Mag 7. I think people's desire in the sort of venture ecosystem and defense tech ecosystem to go public as a traditionally large cap, a $10, $20 billion business is definitely waning. I think companies want to get much, much larger in the private markets and go after that. And that's going to lead to the importance of M&A, right? Because not all these businesses are going to be $100 billion plus businesses. So therefore, the M&A opportunity will be a source of liquidity along that 10, 15-year cycle.
Yeah, definitely. Yeah, I think this year is just going to be a big year for defense tech, lots of M&A. Maybe we'll see one of the primes finally acquire one of these neo primes. But yeah, thank you to our panelists. This was a fascinating discussion. I'm really looking forward to seeing what you guys are going to be doing for the rest of the year. And yeah, thank you.
Thank you.
Thank you.